We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Patrick Yip, Director of Business Development at APMEX. How are you today, Patrick?
Good. Thanks for having me on, Tom.
Excellent to speak with you today. So, before we hit record here this morning, we were kind of talking about getting a perspective from history, seeing if history repeats or even rhymes. That kind of informs our decisions going forward. So, obviously we're seeing historic US inflation. We're facing an interest rate cycle here. So what happened to, let's say, why don't we start with equities and stocks the last time that we faced a cycle like this?
Yeah, so I think just to start, let's touch about inflation too. I think anyone who has done anything recently has seen things go up. Whether you fill your car up with gas, it's more expensive. You go out to eat, it's more expensive. You shop for groceries, it's much more expensive. You look at kind of what some of the commodities are doing. So I just pulled up a chart this morning looking at some of how commodities performed in the past year. Mm-hmm. I'm looking at it. Oats are up 85%. Crude oil's up 82%. Coffee's up 73%. Natural gas is up 67%, and the list goes on. It's just almost crazy numbers when you think about it. This is a 1-year change. And what's interesting too is the CPI actually reported in January that inflation is 7.5%, which I think is way understated because you look at some of these numbers too. And I think that it's definitely a big concern. So what we did over here is we wanted to look and say, like, well, what does this do? And what do investors need to be worried about with this inflation? So we looked at it. Just at 7.5% inflation, which I believe is dramatically understated. If you don't have a plan, 7.5 years of inflation would erode 32% of your wealth in 5 years. And that's actually what we saw in the 1960s is inflation started to rise up. The Fed started to raise interest rates. It took them 9 years to resolve in the 1960s. There was a similar situation in the 1970s where it took 5 years for them to resolve that inflation. So getting back on inflation eroding your wealth, it's in 5 years, 7.5% inflation is going to erode a third of your wealth. And in 9 years, it's going to erode a half of your wealth. So definitely something that people need to consider.
Yeah, it's crazy to think about, like you say, how long that inflation takes to resolve itself, or how long the inflationary cycle took to get under control, right? And then what effect that has on your dollar denominated savings. So what happens to gold in those same timeframes?
Yeah, so gold in the 60s it was actually pegged until about 1971 at $35 an ounce. But the inflationary cycle started in 1965. But from 1965 to 1974, gold went up by 5 times. So from about $35 to about $200. And the second inflationary cycle from 1976 to 1980, it went up 8 times from about $100 to $850. So time will tell whether this will repeat or not. You look at inflation in the last year, and it's actually interesting. If you look at the data from the BLS, it was only 1.4% in January of 2021, which is just insane when you think about how it's went from 1.4 up to 7.5% in a year time.
Well, those numbers, when we think about, I guess, comparing the year over year change inflation wise from 2020 to 2021, that is a bit of a difficult comparison because, we were facing the lockdowns and everything in most of 2020. So looking at that rate of change is a little bit, I guess, dramatic, right?
Yeah, I think it is. And that's a good point that you bring up too, is what's going to happen with inflation. There's one thought that says it's transitory. I think it was actually interesting to note when the Fed said it's transitory, I think inflation was running around 4%, and certainly it's higher right now. One theory is when COVID restrictions go away, inflation could go away too as well. Obviously, the supply chains would ease up, and maybe that has a factor in lowering inflation. But I think it's also interesting to note too. You look at various stats too, and they said about 30% of the money in existence has been printed in the past couple of years. So to me, that's a scary thought. If you hold U.S. dollars or any cash denominated instrument, is now you're going to have this vast amount of money going into the system. And then many times it takes some time. It doesn't get all put in there in the first month. It may take several months. It may even take a year. So I honestly don't think this inflation situation is getting resolved anytime in the short term.
So, being at APMEX, you guys are I believe you're the largest bullion dealer in the US, correct?
That's correct.
So how have you seen, let's say, demand respond to some of these news events? Again, thinking back to, let's say, just the past 2 years alone, when we think about, getting into COVID, how did demand respond?
Yeah, so starting, let's go back to 2019. So 2019 was, I guess, our last normal year before COVID. I know it seems like a long time ago now. I can't believe we've been in this thing for this many years, but it was our last basically normal year. We did about $1 billion in retail sales, which is, as you mentioned, we're one of the largest, if not the largest precious metals dealer in the US. 2020 came around. Obviously, COVID came. We saw our purchasing customers spike by about 1.5x the times that we saw in 2019, and sales almost doubled. So, and keep in mind that doing $1 million or $1 billion in 2019 and doubling that to almost $2 billion is not a small task.
Not an easy task, right?
Exactly. And we sell to the retail public. So this isn't large dealer transactions, the multi-million. These are all retail transactions. And then 2021 rolled around, and we thought that, hey, 2020 was a record year. It's going to be tough to beat 2020. But a lot of these COVID lockdowns continued. We had the silver squeeze movement. We just smashed 2020's numbers in 2021. So we saw about double the number of customers in 2021 compared to 2019, which was our last normal year. And we easily smashed that $2 billion mark in retail sales. And then moving on to this year, we're continuing to see strong demand. Seeing a lot of our existing customers purchase. We're seeing a lot of orders, lot of large orders too. I think people are seeing the writing on the wall that, hey, this inflation really is going up. Certainly 40-year highs at 7.5%. I honestly think that we may see higher inflation and next time the BLS releases their inflation later, I guess, in a week.
So, I wanted to take a couple different segments there. So starting at COVID, we saw a dramatic spike, obviously. Did you see another real spike when the silver squeeze started, and how has that progressed?
Yeah, so we actually, there was another spike in the silver squeeze time. Just looking at like product mix, for example, typically we would see about 75% of our dollars get invested into gold and about 25% into silver. The silver squeeze spiked it up in silver. Obviously, the silver was all in the news, and about 40% of our revenue around that time was in silver. And then people are still seeing our mix in silver is still heavier today than it has been historically. I think a lot of people are seeing that silver may be undervalued compared to gold. You look at both metals, historically, they've been correlated. Gold's near an all-time high at 19 and change. Silver is still well in the 20s, much below its all-time high. So I think people are seeing a lot of opportunity that silver has a lot of room to catch up. In addition, some people might be taking advantage of the gold-silver ratio too, is another thing they might be doing. But looking at history, what's happened in the past is gold typically rallies first, and then silver rallies after gold to a bigger and faster extent.
So Patrick, obviously you guys have a couple different products. Like, you can ship bullion, you can store bullion, or you can kind of, in a way, buy it digitally with One Gold is the program that we've touched on the show before. So did you see the change in storage or any of these options as a result of any of the news events that we had?
Yeah, it's interesting you mentioned that too. So going back to, I guess, the 2020 levels when we first had that COVID scare, what I think a lot of you guys will remember is equities crashed, the metals crashed. You saw silver get to $12. The downside about silver at $12 is you tried to buy any ounce of silver and the premiums were like $10. So you still paid north of $20, which you're like, well, so much for $12 silver. But an interesting solution, and I actually took advantage of it back in 2022, is One Gold, which is a solution that allows people to buy vaulted positions of precious metal, so gold, silver, and platinum. And what One Gold does is it sources 1,000-ounce silver bars from the various like wholesalers and so on. And these bars compete directly against the COMEX bars. But the nice part about it is that I took a position in One Gold at basically about 2% over spot, which is much lower than the $10 premium physical. And then a lot of customers did the same thing too. And then when premiums return back to normal, a lot of customers plan on redeeming this through the One Gold's redemption option and actually taking the physical silver, whether it's gold eagles or not, gold eagles, silver eagles, silver buffaloes, silver round, silver bars, whatever it is. So you have a lot of people doing that too as well. And we certainly saw a big spike on One Gold.
That's interesting to think about, kind of, in a way playing that time arbitrage, right?
Yeah. And I think it's important that I want to speculate on the gold and silver price. I don't want to speculate on premiums. The downside with high premiums, in some cases, I think silver eagles are still selling for about $10 over spot. You don't want to buy silver eagles at a $10 premium. Let's say silver goes up $5 and you're like, hey, you made the right investment, but your premium went down $7. But so you actually lost money. Which is like, well, unfortunately, no one knows where premiums are going to go. That's a function of what happens with the supply chain and the mints and so on like that. So I would bet on the silver price or the gold price, not on premiums.
So touching on that subject again, Patrick, how did you see premiums really react at that time? And have we seen premiums come back down at any point?
Yeah, so during the COVID squeeze in 2020 and the silver squeeze in 2021, we saw that retail supply just basically tightened up. A lot of times that you have a lot of these mints and they're running limited staffs. So they get to only produce a certain number of units. In many cases, let's say you're a mint and you produce different sizes, you produce a 1 ounce, a half ounce, a quarter ounce, and a 10th ounce. You said, hey, I only can produce X number of units. Well, you're probably going to produce the 1 ounce because it's the most popular. So what we saw is the retail side completely dry up, which puts premiums way high, much higher than I typically like buying at. And then even an interesting thing on the One Gold side too, as I mentioned, One Gold buys these 1,000-ounce silver bars, 400-ounce gold bars. So competing directly against the COMEX inventory for metal. There was a time during the silver squeeze movement where we reached out to all our wholesale partners all around the world and we said, hey, we need more silver bars. And then they said, hey, there are none available right now, which is a little scary because, that market's always been pretty deep.
Mm-hmm. Yeah. So, obviously there's a big difference in demand, let's say in the 1,000-ounce bar market or the 400-ounce bar market versus the 1 ounce market. So did you see even premiums on the large bar market spike dramatically as well?
Yeah, those went up as well. And they're still higher than what they have been, let's say going back to like 2019 pre-COVID levels. Mm-hmm. It's funny, we do our budgets and we look at it and every year we said, hey, I think premiums are going to go down. Forecasting a gradual decline in premiums in terms of our costs and what we charge customers and so on like that. But unfortunately, things are just high. They haven't gone down. As I mentioned, the mints are running limited shifts. They're seeing a lot of the demand for all these products at levels that they have not seen in the past. So they're running at wider margins too. So they're charging more for their product, which makes our costs go up, which means we have to charge more to the customers. A lot of times people look at it thinking like, hey, certain bullion dealers are gouging. I said, no, it's not necessarily that's the case. It's the whole supply chain where everyone's just living off different margins now. Mm-hmm.
So what are some of the, let's say, the top products that you guys have sold in the last year or two here?
Yeah. So sure. So starting on the on the physical side on gold, our most popular product is by far the Gold Eagle. That's a sovereign coin minted in the U.S. About actually a third of our sales on the APMEX side are Gold Eagles, and this is talking about the various types of Gold Eagles, whether this is a full ounce, a half ounce, a graded ones, and so on like that. A lot of Gold Eagles. Following that is people looking for low premium gold. So about 30% is your various gold bars, with the popular ones being PAMP Swiss and Credit Suisse, like the 1 ounce gold bars. Typically, these will be sold at a lower premium compared to the Gold Eagle. And then after the gold bars, you have about 10% in the Canadian Maple Leafs and 10% in the Gold Buffaloes. So that's on the gold side. Looking at the silver side, it's a little different. About half the demand on silver is low premium bars. So these are the low premium bars and rounds. So these are the Buffalo rounds, the APMEX rounds, 100-ounce silver bars. Basically, the people who want more silver for their money. So they said, "Hey, I don't want to pay whatever it is, $2 over for some premium, or actually it's probably more today." Thinking back to pre-COVID, let's say you don't want to pay $5, $6, $7 over for a silver coin. But you just want a 100-ounce silver bar, you get the exposure to silver. So about half the demand is low premium silver. And then following that, about 30% of the silver demand is from the Silver Eagle. So by far our most popular silver coin.
Mm-hmm. So what are some of the, let's say, the potential products to avoid, Patrick?
Yeah, that's a great question. And a lot of times people ask that question too when they start getting involved. I think a lot of it has to be, you have to look at the bid-ask spread. You look at, for example, and the bid-ask spread, just to be clear, is what you could buy a product at and what you could simultaneously sell it at. So this is like what you would lose if you bought and sold the same day, assuming no change in spot. Mm-hmm. So you look at a Gold Eagle right now, and a Gold Eagle is currently for sale for about $100 over spot, which people might say, well, I would rather buy let's say a 20 Swiss franc for near melt. Well, why would I pay $100 over for a Gold Eagle? Mm-hmm. But it's important to note that the Gold Eagle, even though you are paying over $100 over spot, you could also sell it back to most dealers for $30 or $40 over spot. And that's your bid-ask spread. So you're essentially losing, let's say, $60, $70 on that transaction just by on both sides. If you look at, like, let's go back to the 20 Swiss franc, you may be able to buy it for, let's say, slightly over the gold content or slightly over melt. However, when you sell it, you might get 90 or 95% of melt. And it's just a simple math number, quick calculation of, hey, which is the better buy? So I think that's one thing to consider too when you do buy certain items. In terms of actual products, I personally would avoid kilo gold bars. And the reason for that is in the past couple of years, they had a couple counterfeits where people would put tungsten bars in these kilo gold bars. Mm-hmm. And what we do is everything that comes into our facility, we actually double check. Obviously, we have numismatists, we have coin experts look at all the product to make sure it's authentic. We use an XRF gun that actually looks at the metal content. So if I zap this gun at it, it might say, hey, it's 90% gold, 10% copper. And then we use a Sigma scope too that looks at the metal conductivity to make sure that these products are authentic too. And I think that's one of the things, if you do decide to buy physical gold or silver, is to keep in mind who you're buying from. And does the dealer have that reputation? Is the dealer going to support the product? Does the dealer have the ability to authenticate it too? You look at some of these coin shops and they may be a mom and pop coin shop. And I don't think they have all that sophisticated equipment. And you're much more likely to buy a fake through a small dealer than a large dealer like APMEX. Mm-hmm.
So Patrick, when we think about, you mentioned numismatics there, what things are we considering when you're looking at numismatics or collectible coins, for example? Do we just take into consideration the melt value, or if you want something that's fancy, like a Pac-Man coin or something that I saw on your guys' site, is that something that you're going to get real return on?
Yeah, so every numismatic is different. First of all, before I make a recommendation, numismatic, I would recommend that you buy what you understand. There's people who make a living out of numismatics, buying and selling the stuff, and then that becomes their whole life. And there's people who buy numismatics and they get burned in their first buy. So just something that you should be aware of. Understand the market that you're participating in. One example that I can think of off the top of my head related to how a numismatic may perform is
just one sec before we go into that. Maybe let's define what numismatic is for those that might be confused by that term.
Sure. Yeah, that's a great question too. So numismatic is anything that describes like a collectible coin. You could have a coin that is worth millions of dollars, which is basically a numismatic coin. You could have a coin that's worth basically slightly over the silver or gold content, which we call semi-numismatic. This would be something like, let's say, a pre-33 St. Gaudens coin. So pre-33, meaning that these are the U.S. coinage minted prior to 1933. And back then, the United States actually minted their coins out of gold and silver. So this is that a lot of those coins are what we call like a semi-numismatic, which they're somewhat collectible, but they're still dependent on the gold and silver price.
So you were going to bring up an example of seeing a couple of years ago a numismatic. Sorry, when I interrupted you there.
Sure, yeah. So looking back at 2018, I saw an interesting opportunity to buy some semi-numismatic coins. So this is a coin, as I mentioned too, is still somewhat dependent on the metal price, but does have a little higher premium. So gold was about $1,300 an ounce. So it looks low, looks extremely low compared to right now, but I think today is a great opportunity to buy it. I think the value of gold is better than ever. But going back to 2018, gold was about $1,300 an ounce. A St. Gaudens coin traded is basically slightly under an ounce of gold, and these coins were selling for about $70 over spot. So let's just round up. Let's say $1,400 for the coin. Mm-hmm. I thought it was an amazing opportunity and this is once again a low graded, let's say MS61, so mint state 61 St. Gaudens. You look at the premium, it was so close to melt. You're basically buying a somewhat collectible coin for the gold content. So fast forward today and you look at it, gold's around $1,900 an ounce. And that premium of that same coin is now about $300 an ounce. So you look at it, so your gold price went up by about $600 an ounce. And then your premium went up by over $200 an ounce. So you kind of got a double bang over there. Your premium went up, your metal went up, and turns out that numismatic or semi-numismatic coin turned out to be a better investment than just buying a straight gold eagle. Mm-hmm. But once again, I recommend that you do your research. Don't just buy it because I mentioned the coin. Make sure you know what you're getting into. And we have over 25,000 products at APMEX. Certainly a lot of different options for you to explore numismatics.
Mm-hmm. So in a way, can we think of numismatics as almost like the luxury good of gold and silver bullion?
Yeah, it's like a collectible. You could there's people who collect this stuff. The nice thing about some of these pre-33 coins is they're not making them anymore. They're 100-year-old coins as opposed to the gold eagle. They're going to keep on minting them, assuming the mints have the limited or the capacity to mint it. They have the staffing and so on like that. So over time, you have a collectible that becomes rare. And if you could get any of these coins close to the metal content, it may not be a bad investment.
But is that premium that the collectible side of it commands at times, is that somewhat variable depending on, let's say, like a crisis moment that you might not get that premium in a time when people just really want the metal?
Yeah, that's a good point too. I guess if it were an extreme crisis and people just wanted the metal, then that numismatic premium could go away too as well. Mm-hmm. So you are banking on some of the stuff too. It's like you are banking on some of the collectability. Mm-hmm. And that's once again why I say you should probably understand what you're getting into first. Another thing that's interesting too is even like some of the modern numismatics too. So some of these mints release newer coins too, maybe with a certain design or something like that. They mint a limited production of these, and you wait a couple of years, and what you see is they track obviously the gold and silver price. But since people can't get them anymore, people say, "Hey, I want those coins," and they're willing to pay up for some of these coins too as well.
Mm-hmm. So, Patrick, when we think about, let's say, gold hits, let's just use a round number, $5,000 an ounce, and we want to sell any of these coins or this bullion back to APMEX, for example. How is it set up that you guys have, let's say, a credit facility, or do you have an idea of how you would go about having the currency available to buy back that metal? And what appetite would APMEX have for that?
Yeah, so APMEX is basically has been in business for over 15 years. We are extremely well capitalized. The nice thing about the precious metals market is it's a highly liquid market. So in the event that, let's say, I don't think it would happen anytime soon, but let's say in the event that we get massive, large, tens, hundreds of millions of dollars of precious metals flowing our way. The nice thing about the market is it's extremely liquid. So what we could do is we could essentially buy it and then we could sell it to like a wholesaler, a mint, or another user. So, I mean, there's these transactions between all these parties, including the mints, wholesalers, APMEX, and so on. They happen at extremely thin margins. So the metal is highly liquid. So that's where I guess the capital would come from in the event that we do get, I guess, an inflow of a large amount of metal. But as I mentioned, I mean, we're have very well capitalized, never ran into that issue.
So what are some of the, let's say, the considerations around the different storage options that one has in this world today?
Yeah, so at APMEX, we like to provide solutions for all types of investors. If you want the physical, we'll gladly sell you the physical through APMEX. As I mentioned, we have 25,000 products. We'll ship that to you for physical possession. Another option we have started back in 2012 is Citadel. And what Citadel is, it's a secure storage and insurance company where you ship your metals or where your metals are stored at a Brinks location. To get started there, you could either buy metals from APMEX and then select Citadel as your depository option. Or if you do have metal on your own, you could send it to APMEX, we'll authenticate it, and then we store it with Citadel, which is a Brinks facility. The nice thing about Citadel is it actually offers a seamless selling process. So in case you want to liquidate your metal and you said, hey, instead of having to ship this, we actually cover the shipping, the logistics. We'll just write you a check or send you a wire, whatever you want to do. So that's one storage option is Citadel. It's nice if you have certain coins that you like. Maybe they're semi-numismatic, maybe they're numismatic, and you said, hey, I value this more than a gold eagle, and I don't want to just sell it just to get an exposure to gold. So that's a great option there is Citadel. And then back in 2018, APMEX partnered with Sprott Asset Management, which many of you guys know who Sprott is. They're one of the largest alternative investment managers. And we wanted to create a modern way to buy precious metals. And many people have actually reviewed One Gold, and they said it's kind of like the Robin Hood or the Coinbase of precious metals investing. But One Gold is basically a platform that allows users to buy, sell, and own vaulted positions of gold, silver, and platinum stored at various vaults around the world. So we have the US, Canada, UK, and Switzerland. And I think some of the best options on One Gold is you could actually buy it for a very low premium. As I mentioned, I personally bought in One Gold back in 2020 when silver hit $12. I bought in. I still do own a position in One Gold. So the premiums are extremely low. And the nice thing about a solution like One Gold is I don't need to worry about insurance, which is another topic too. When you look at any person I know who have gotten into precious metals, they start with a small stack. Maybe it's a couple $1,000s, then it grows to tens of thousands, and maybe it grows to 6 or 7 figure. And then at some point you're like, well, I wanted to protect against inflation, but now I'm worried about theft. I'm worried about fire. And that's where a solution like One Gold or Citadel is a great option. I recommend that you diversify. Don't have all your eggs in one basket. Don't have a large safe with all your gold in there. You may want to look at storing it somewhere else just in case the unlikely happens.
Mm-hmm. And just to kind of, I guess, go over the risks, not necessarily risks, but the idea of the One Gold program. It is a pooled product, and when you convert, if you want to convert to physical, you're still paying a bit of a premium when you do convert, just dependent on the time that you choose to do that, right?
That's correct. So what One Gold is you have an allocated and segregated position. So like if let's say I bought 10 ounces of gold, I don't have 10 gold eagles or 10 gold maples or something like that. What I do have is I own 10 ounces in a 400 ounce gold bar. Mm-hmm. Unfortunately, you can't really chip off 10 ounces of 400 ounce gold bar because then the product loses its integrity. Nor do I want a chip of a 400 ounce gold bar because I don't even know how I would sell that or authenticate it. So if I do sell that, what I do is well, I guess on One Gold, you have two ways. You could sell it and then withdraw it to your bank account by ACH or bank wire. That's one way. Or the second option is if I wanted to say, hey, I want to take this 10 ounce gold position and actually take gold eagles. What it is we value that based on the gold content. And then since the gold eagle does have a premium over a chip of a 400 ounce gold bar, there is a premium when you do the redemption option through One Gold.
Mm-hmm. So I know you guys are thinking about launching a new product, the Bullion credit card. So can you talk to us about that?
Yeah, so this is something I'm super excited about. It's honestly, I think, a game changer in the industry. You hear about credit cards that offer you miles or cash back or something. I think a lot of people, especially with inflation running, cash back may not be the best idea, especially for the long-term plan. So we've partnered with a local bank over here, and we're planning on launching the Bullion card in May of this year. And what the Bullion card is It's a credit card that allows you to earn precious metals with everyday spend. So you're going to get 4% cash back or 4% metal back in this case if you spend on APMEX or One Gold, and you get 1% metal back on all your other purchases, whether Target, Costco, wherever you shop. We do offer a couple interesting incentives to get people to sign up. So you'll actually get $150 or basically 15,000 points after you spend $1,500 on your Bullion card that you can invest into gold, silver, whatever you want. We have a 0% APR for 12 months, 0% balance transfer APR for 12 months. And then there's going to be two different ways you could redeem your metals. If you apply for the Bullion card on APMEX.com, you could basically redeem your points for any of the products that we sell on APMEX.com. And if you do it on OneGold.com, we're actually going to allow you to auto invest it. So let's say I earned $100 in gold for this month. I could select, hey, I want this in US gold or Canada silver, or whatever I want to do. Mm-hmm. And then every single month, I just see my asset balance on One Gold grow, which is kind of neat because you're essentially getting free precious metals just as you do your day-to-day life.
And you're also, in a way, dollar cost averaging too, right?
Exactly.
Mm-hmm. So, Patrick, when we think about, let's say, the plethora of options that we have when we can invest in gold and silver, to you, what are the downsides of some of the ETFs? Why is GLD and SLV not necessarily the most attractive option anymore?
Yeah, so we did another analysis too, another research paper too, looking at like what are the pros and cons of all these different investment options. And obviously, everything has pros and cons. Not going to say that everything is 100% great, but you look at the GLD, you look at the SLV, and there's a couple different issues there. One is, and I think the biggest issue too is they clearly state in their prospectus that the metal is not insured. And so, which to me is a big downside because I don't know where this thing is stored. I don't know their controls in place. I'd hate to say, hey, I'm investing in gold and silver, and hey, the metal got lost or damaged or stolen, and hey, that my investment went to zero. That I think is one of the biggest concerns with a GLD and SLV. And another thing too is they actually said that they could store the metal at a custodian, a sub-custodian, or a sub-custodian of a sub-custodian. So to me, that's a little bit far removed. It's like if Tom, I said, hey, here's my gold. Could you hold it for me? It's like, oh, don't worry, I gave it to my friend. And oh, by the way, my friend gave it to my friend. And I go, are you sure my gold's still there? You lose a little bit of visibility into that. But I personally would not touch the GLD or SLV. I think owning physical or owning metals through One Gold is a much better solution.
So how much gold or silver should we have in a portfolio? If we use history as a guide, is it between 10 to 20% of our typical net worth that one should invest in physical metal?
Yeah. So a couple months ago, we looked at just basically what the best allocation is. And this is according to history. Obviously, everyone's allocation is going to be different. If you have an inflation hedge, maybe it's less. If you don't, maybe it's more. Or maybe you feel like, hey, it's more in today's investment climate. But typically, when you talk to a financial advisor, they said, hey, you should do stocks and bonds. And the thought is, if you do stocks, you're more aggressive. If you do bonds, you're more conservative. And an allocation would kind of balance a little bit of that. And maybe you go heavier bonds as you get older. But we looked at the last 50 years of data. So basically since the 1970s. I didn't go before the 1970s because the gold price was pegged at $35. So it's not really a fair indication, but basically, 50 years of data. And then what I did is I looked at 10-year average return. So I normalized this. So I'm not going to penalize stocks in 2008. I'm not going to give gold the benefit of the doubt in 2011. So I'm looking at 10-year average returns to say, hey, what can we expect on a normal portfolio, looking at kind of normalizing some of the returns. And we actually found out that it's actually possible to have almost a return of a 100% stock portfolio with the volatility of a bond portfolio. So basically the best of both worlds. You get the return, but none of the risk. With 80% S&P portfolio and 20% gold. And the numbers actually work out too. And these are real returns too. So the stock portfolio over that period of time had a real return of around 7%, 5% standard deviation. The bond portfolio, obviously lower return, 5% return, 3% standard deviation. So lower return, lower standard deviation. And the gold S&P and gold portfolio had a 6.7% return. So not as a couple basis points below the stock portfolio, but a 2.7% standard deviation. So actually lower than the bond portfolio. So kind of an interesting thing. As I mentioned, everyone's case is different. I'd hate to make just a blanket number and say, hey, everyone do it. It really depends on your asset allocation, your age, and so on like that.
Mm-hmm. So Patrick, what other considerations, there's in the States, you guys have the precious metals IRAs. What are some of the considerations around that?
Yeah, so with One Gold, we actually have I think it's honestly the best IRA solution, and it's a solution I currently recommend to my friends. So typically, in a precious metals IRA, you have three parties, and you would have the dealer. So this is the dealer like APMEX who would sell you the physical product. You have the depository, which is where you store your metal. So this is essentially your vault. And then you have your custodian, which manages your account and processes it and gets you make sure your account's all legal and IRA eligible and so on like that. Mm-hmm. The downside about a traditional precious metals IRAs is you're dealing with physical metal. You may be buying metal from APMEX, which is in Oklahoma City. Maybe you're shipping to a depository on the East Coast. You ship it over there. And like, if you ever want to sell, now you have to worry about logistics of sending this metal back from the East Coast depository back to APMEX or whatever dealer you choose. You have to wait, they cash you out and so on like that. So a little cumbersome on the traditional precious metals IRA. But what we've done at One Gold is we've combined the dealer and depository into One Gold. So essentially you're buying from One Gold and you're storing with One Gold. You still do have your custodian, which manages your IRA account. But the nice thing about One Gold is, first of all, the spreads are much lower, but when you transact on like a allocated segregated metal as opposed to physical metal. And the next thing too is you could easily trade in and out of this. One of the things I recommend is if you have a Roth IRA, obviously you've paid tax on that already. You could trade in and out of it. Maybe you want to take advantage of the gold silver ratio, or maybe you just think that, hey, we're facing a rate cycle and maybe this is bearish for gold and maybe I want to hold cash. You could put it in cash for a couple of days and get it back into metals and a couple of days later.
Interesting. Patrick, is there any other considerations that we should go over before we wrap up?
Yeah, I think this investing climate is a very unique situation. We mentioned that inflation is at 7.5% currently. I think it's way understated. I think for many younger investors or investors who may not have studied history, I think make sure to have yourself an inflation hedge in place. You don't need to go crazy. You don't need to have, hey, I'm going to do 100% gold or something, but a little bit, it couldn't hurt. A little bit could go a long way. I think that the next couple of years are going to be tremendously bullish for precious metals, just because we haven't seen this type of investing climate since 1982, basically. So I would say position yourself, and you don't want to just ride out inflation just with your normal portfolio.
Absolutely, I think a lot of our listeners are already kind of on top of that, right?
Yep.
Perfect. Of course, you guys are available on Twitter at APMEX and APMEX.com. Anywhere else you'd like to point to?
Yeah, I would say check us out on APMEX.com, APMEX.com. Check us also out on onegold.com. That's ONEGOLD.com. Both companies have mobile apps on the Apple App Store and Google Play Store. If you do have any questions, feel free to reach out to me directly. I'm at patrick.yip@apmex.com. That's patrick.yip@apmex.com.
Excellent, Patrick. Thanks so much for your time today.
Great. Thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.